Welcome to Money 911, where we talk about health, wealth, and peace of mind. Not just in numbers, but in how we live, how we think, and how we lead our lives. Because true wealth is not just about what we accumulate. It's what we understand, what we protect, and what we pass on. And today, we're stepping into a conversation that is stirring a lot of emotion, curiosity, resistance, and for some, even fear. Bitcoin. But this is not a conversation about hype. This is not a conversation about chasing returns. This is about clarity, responsibility, and legacy. Our guest today, Eric Runge, is an advisor strategist and what I would call a bridge between two very different worlds, Bitcoin and Wall Street. He is the founder of Family Office Bitcoin, a registered investment advisor serving families managing over 50 million in assets. Families who are not just thinking in quarters, but in generations. Eric brings over 20 years of experience in traditional finance combined with deep study of monetary economics and a grounded, disciplined approach to helping families implement Bitcoin the right way. Not emotionally, not impulsively, but intentionally. He works with families on the parts most people overlook: custody, tax structure, governance, and how to hold steady through volatility, not just react to it. He's the author of Bitcoin and the Family Office, an intelligent introduction for the ultra-affluent. Eric, welcome to Money 911. All right, Eric, before we even start talking about Bitcoin itself, what do you believe is shifting underneath the financial system right now? The people are feeling, they don't really understand what's going on. And do you see Bitcoin just as an asset, or is it revealing something deeper about trust, control? What do you think intelligent, successful people can look at Bitcoin and come to different conclusions, right?
Yeah, I see that there is something in the back of people's minds that they don't fully understand.
Yeah.
It has to do with inflation and that the system itself feels unstable to people, but they can't exactly put their finger on why. I think it's because we live in a fiat money system where the government can print money at will,
Yep.
and people don't, it's hard to connect for the regular person or the ultra high net worth investor, uh, money printing and the rise of prices and all of the connections there that create really massive instability for society. It trickles out into areas that I think people don't even expect.
Exactly. Exactly. So when Bitcoin enters the conversation with families, what kind of emotions do you see come up first?
A lot of times, because we're early in the adoption curve, sometimes I see disgust. um, Mostly just,
Yeah.
not mostly just, but I see more intrigue now than I did a year ago, but I still see quite a bit of dismissal. And I think that's understandable for now.
Right. So is the resistance really about Bitcoin, or maybe it's, challenging what people have believed is safe for decades? It is shifting, and the paper money is going away. Um, so how much wealth management is actually emotional management, right?
Yeah, I mean, I think Bitcoin has a lot of people, when people respond or react to Bitcoin, sometimes it's genuine, just lack of having studied it. And that's fair. But
Mhm.
I think a lot of times there is a deeper emotional layer to when people feel resistance to Bitcoin, but can't say why. It almost seems like sometimes it's a threat to people. That might sound like an insult, but it's not meant to be. I think Bitcoin is quite a threatening asset. It's unique, it's highly volatile.
Right.
But it requires an awful lot of study that stocks and bonds don't require. And stocks and bonds require a lot of study, but Bitcoin is in a class all its own in that regard.
Right. And you work with families thinking in generations. It's just not a one off, right? So, how does
Yeah.
Bitcoin change the conversation between the parents and the next generation? I mean, you're building out a living legacy and a legacy that goes on and on.
Yeah. I think Bitcoin changes it not so much in that owning it causes something different to happen, although I think that it does. But it's way upstream of that. It's the type of study that you have to do to even come to a clear allocation decision of either yes or no. But having put in the hours to study Bitcoin to make that ultimate decision, I think that's the beginnings of what starts to change a person.
Hmm. So, do you see a lot of, does it change like the conversations with the parents in the next generation? Are they actually like, game plan and sitting down and explaining it and going through it like that?
Yeah, the people who have put the most amount of study in,
Uh,
the families who have really sort of, well, they've also bought into Bitcoin, but that's in my view because in my observation, because those who study it longer than about 10 hours want to then study it for another 20 and then another 40. Uh,
mhm.
because it's not like studying an old, boring, dry economics textbook. There's really something there that hits bedrock from a sort of economic principles point of view, a human nature point of view, a how governments operate point of view. And you
Mm,
don't have to be a tinfoil hat, I hate the government sort of a person. This is not about the American government. It's about just the nature of governments since the beginning of
exactly.
mankind. Yeah. So
Exactly.
yes, it does because those types of conversations are deeper in nature and they're not just wealth preservation conversations, they're personality preservation, it's family relationship connection preservation conversations. And that's where families really need to start. If they're starting at wealth preservation and not thinking in terms of like preserving intellectual capital and relationship capital, they're behind the eight ball.
Definitely. And so it's a wealth tool, a freedom tool, and sort of a truth teller exposing what's broken in the financial system, like you just said. But mostly they're rejecting it because they don't understand it because it challenges the trusted, what we've always done. So, what's more dangerous for a wealthy family, owning Bitcoin the wrong way or ignoring it completely?
Oh, that's a good question.
Yeah.
You know, where that's a where we're at in the adoption curve right now
Hmm.
is I think it's becoming harder and harder for families or investment committees to justify not owning Bitcoin without saying why. Like any new asset that comes out, you can just blow it off easily and rightfully so. You're not just going to pick up any old new asset that comes out just because it's new or whatever. You have a mandate to preserve capital, and that's really important. But Bitcoin is nearly 20 years old, and so it's got certain unique characteristics. And because of its institutional adoption, recognition by the US government, in terms of the strategic reserve, large ETFs adopting it and coming out and that sort of thing, it's just getting to the point where you can't really ignore it without saying why. And the research is starting to tilt into here's what it looks like, here's what Bitcoin looks like in your portfolio. Uh, this is something that you need to truly consider. So, it's hard to answer. I know you're asking that question for fun.
Yeah.
The other side of the equation is what if I do own it and I own it wrong?
Hmm.
Um, Wrong, not in the sense of right and wrong, but wrong in the sense of it'd be wrong to leave the keys to my brand new Corvette sitting on at the train station in New York City on the ground. That's just a bad idea. So it's more dangerous than anything. If you have 100 coins stored on a platform and you're not even aware that there are such a thing as private keys, that when somebody gets your keys, they get your coins, and there's literally no recourse. There's nothing you can do about it. That's a very dangerous spot to be in. So, maybe they're both a little dangerous, just in different regards.
Right, right. So if a family says, well, we've built this wealth carefully, and why would we touch something so volatile? What do you say?
Yeah, a very good question. And again, maybe their mandate says that they can't take an asset with
Mm,
60 vol or 80 vol. Um, so, that's okay. For families with a higher risk appetite or a mandate that can handle that level of volatility, maybe in small doses,
mhm.
um, that's okay. I don't seek to try to change the minds of investment committees or of families who are not interested in Bitcoin. But what I would say is we have a solution um, that cuts the downside vol. It also cuts upside volatility as well, so that you can own or gain exposure to the price movement of Bitcoin without having to endure a 60 or 80% downturns in your portfolio. So there are solutions, and I'm not the only one, but there are solutions that exist that seek to cut that volatility while still giving you exposure.
That makes sense. So, but it does require a different emotional maturity than traditional investing. And of course, right? You would say that.
Yeah, yeah, that's like we could like spend an hour on what Bitcoin does to you when you study it.
Hmm.
I think that it grows you up. And the problem with saying something like that is that it implies that the family office principal or just a regular investor was immature already. And that's really not what I mean. What I'm saying is like the fiat system, I don't have to think about it when I slide my debit card at the store to buy a loaf of bread. It seems like the money is going from my debit card to Safeway's, bank account or whatever. In reality, I don't have to consider that there's a middleman in the middle, the bank, who is holding their finger on the permission button and could, in principle, take their finger off the permission button at any time. That's third party risk, or sort of, you might call it a different type of custodial risk, right? The
Hmm.
system doesn't force you to think like that because they take care of it. There's that middleman, right? Bitcoin, because it's peer to peer, eliminates that. But that means that if I send my coins to you, there's no middleman to get in the way of it and stop the transaction. But there's also no way to reverse the transaction if you end up not being you, and my coins go to a different address. So having to think about um, that alone creates a different conversation and a different emotional response or maturity response in me. If I know that there's no reversing this transaction and I'm going to send $100 million to you, I have to really do my due diligence. And the process of doing due diligence matures you over time. I don't care how mature or immature you were when we started. The point is, it just continues to grow you. And that's the nature of Bitcoin. It doesn't coddle the user the way that the current system I would say maybe is designed to.
Right, right. That's really a good point because the due diligence is, that, I mean, that's a whole other show of the due diligence. How do you even know, really? I mean, that's pretty big to figure that out, right?
Yeah, and it's not like it's totally impossible. It's just
Hmm.
that, whereas I might send the whole 100 million right now in the traditional banking system because Fidelity is the guarantor of the transaction. If I'm going to send it to you, maybe I start with 1 million to make sure that the address is correct and that you
Hmm.
can confirm it. So you just have to take a different set of measures than you would, and it does require a little bit more due diligence. And we're talking about Bitcoin as a currency right now, whereas I think where we're at in mass adoption right now is more of a store of value. But
Hmm.
truly, it doesn't matter. Bitcoin doesn't care. It doesn't coddle. It just does what it does, and it is what it is, and it's not going to change.
So, how do you how do you help families separate the noise in the space with all the strong opinions and inside of that, are you You know how you say, well, we have 10% safe. And I mean, are you just like a certain allocation inside the whole portfolio, or how do you separate the noise in the space with all the different opinions? You should do this, or you should do that.
Mm. Yeah, that's a great question. The noise in the space that I see is here's what Bitcoin's gonna do. A YouTube video that says Bitcoin just broke Europe, or like a clickbait type
Right,
headline that
right,
makes me really want to go, oh, what did Europe break? And then I watch it and I'm like, well, Europe's still going along the same way that they did yesterday. So I
right.
I don't know what the deal is. So yeah, there's a lot of hype there. That's really a lot of noise.
Mhm.
The signal is the longer term, quieter, boringer trend, which I don't find boring, but it's much more boring than clickbait hype. But the trend line is who is adopting? What sovereign wealth funds are adopting? What countries are adopting? What is their view on Bitcoin? Who hates Bitcoin and who's banning Bitcoin? That sort of thing.
Mhm.
So that's signal versus noise in my view. Another signal versus noise is price action. If Bitcoin is camping at 69,000, and then there's a ton of bears again on YouTube or out there on the internet saying, yeah, Bitcoin is dead for the umpteenth time, that can also be noise.
Right.
And then I listened to Michael Saylor, and he's saying the same thing that he did 6 months ago, a year ago. It's just raw, steady conviction. That's signal, and that's based on Bitcoin's fundamental unique characteristics. So that's what I think of when I think of signal versus noise, is what's true versus what are people trying to say that sort of pokes the emotions.
Right.
As far as
Right.
allocation, right, I can't make a blanket recommendation because it's very family dependent,
Yeah.
and I would hesitate. What I can give is some just I can tell what other people are talking about. Other people have been talking about 1 to 5% allocation of Bitcoin for an overall portfolio. Some institutions are talking about a 10% allocation. Um, there's other research that shows that 1/2 of 1% is all you can allocate to a traditional 60/40 portfolio without meaningfully increasing volatility,
Hmm.
but still capturing a tiny bit of asymmetric upside return potential. Um, and that's just raw, pure Bitcoin exposure, full price action, full volatility. Then, if we consider a downside risk managed Bitcoin sleeve that doesn't carry 60 vol, but maybe it carries 20 vol, that becomes a different question. How much do we allocate? Ultimately, it's a matter of family office mandates or just investor preference as to how much of this asset they want to hold. There's not really a science just yet, in my view, as to how much is appropriate.
Okay, that's honest. So the the 70%, drawdown reveal, what does that really reveal about the family's preparation and structure, right?
Well, yeah, if a family has a stated risk tolerance of X on paper, and then 6 months later, and like let's say that they allocate to Bitcoin in X amount. 6 months later, Bitcoin is down 70%, and there's massive panic within the family or the investment committee, then their real risk tolerance is not what their on paper risk tolerance said. And Bitcoin definitely can and will definitely reveal that. You don't want to be a tourist in Bitcoin. You want to know what you're getting into, when you're getting into it, know what it is that you hold. Uh, and when those drawdowns come, not if, but when, um, it's helpful to do a review of what the asset is and why you bought it in the first place. And partly that's why I have a job, because to remind people, hey, this asset has not changed. It's got the same unique characteristics. That's why we bought it, not necessarily for price appreciation. Although price has appreciated, we bought it because it's unique. And that's what we need to sort of remember when the sort of proverbial drill is going into your head in either down or sideways markets. And Bitcoin is renowned for its down and sideways markets.
Hmm.
It'll do nothing for the longest period of time, and it can make you question your own conviction. It can be like a psyop on your
Yeah,
mind.
right. And then
Yeah.
boing. Yeah, for
And then
sure.
boing, it goes up.
Right. And then boom. Yeah, definitely.
Yeah.
So
That's
What
right.
would you want, like a family matriarch or patriarch, to understand before the next generation pushes the Bitcoin, you know, pushes for Bitcoin exposure?
Oh, are you thinking of like maybe a first gen patriarch or matriarch that's not doesn't have conviction yet on Bitcoin,
Yeah, yeah,
but maybe their kids or
yeah.
grandkids are like
Yeah,
adopting it?
you're right. You're just coming into the, that situation. What, of kind of like, how do you
Yeah.
talk about that, or what would you want them to say?
Yeah, like why are your kids so hyped about it?
Yeah.
Um, yeah, well, it's always about the basics. It's always
Hmm.
about what is the problem. So if I had a half hour to talk with an FO principal, I would just talk with him about what is the problem. And FO principals are very well aware of the problem. The problem
Hmm.
is at its core inflation.
Right.
That's the thing that is eating away at your wealth. Stuff is getting more expensive over time. If you put all of your
Yep.
money in the bank, inflation is going to beat that interest rate. And so your 100 million today is not going to be what it is in 100 years. The buying power is going to diminish significantly. What many people don't know specifically is that the US dollar has lost 97% of its purchasing power
Yep.
since 1913. So if I had 100 million in the bank in 1913, I'd still have 100 million in the bank today, but that 100 million is not the same 100 million, right? It like
Right.
looks and smells the same, but it's not
Yep.
the same.
Hmm.
That's the problem. And since 1971, Nixon depegged the dollar from gold. That just exacerbated it and made it worse. So FOs are painfully aware that this is the problem. Currency debasement is a thing. They feel the
Yep.
pain of it every single day, and they know that government's not going to stop printing money. That's where I'd start and
Hmm.
get agreement that yeah, that's the
That's
problem for
good.
sure.
Hmm.
From that, it's about why this crazy hype about Bitcoin. It and the answer is when we start to study Bitcoin for what it is, aside from price appreciation, we see that it's very unique. It's a truly unique asset. Take one element, one fundamental characteristic of Bitcoin, just the scarcity. Um, Scarcity is the idea that there is way less of something than there are people who want it.
Hmm.
And so there are things on this earth that are relatively scarce. Gold and diamonds are relatively scarce, but they're not absolutely scarce. They're relatively scarce in that they're hard to make, but they're not impossible to make. We can always send miners into the hills to make more gold when it becomes price efficient. Um, Bitcoin is literally impossible to mine more of it. Once we hit 21 million coins, that's it. The code cannot be rewritten. And so it's literally the only asset in the world which is not renewable, which is not abundant. Those are two words that people like the sound of, renewable and abundant.
Hmm.
In the case of your currency or your store of value, you want the opposite. You want scarcity. So gold has value because of its relative scarcity in part. Bitcoin has absolute scarcity. And so that's one of the very unique things about Bitcoin that make it different to any other asset out there. Again, not a promise that it's going to go up in value. I have no idea. But I do know that when you study Bitcoin, it starts to become apparent this thing's unique in the history of the world. And so that's why an FO's grandkids might be excited about it.
Right. Right. Well, we talked about it before the show, a little bit about the gold and being used as a hedge against the inflation for 5,000 years. So, does that
Yeah.
play at all with Bitcoin inside of the process here?
Well, I think Bitcoin may want to compete with gold at some
Oh,
point.
okay.
It may be trying to compete with gold.
Hmm.
Um, if we take gold has been and had been, just like you said, the sort of gold standard, the
Right.
relied upon store of value for 5,000 years, like you said, 6,000 years. And that's because of its unique characteristics. Um, you can easily identify gold as such, so you can pass it back and forth as a currency or a store of value. There are other unique characteristics that cause gold. Its scarcity is another one to be valued and to come to have been valuable, as opposed to salt or seashells or stones, which
Right.
have all been used as currency in the past, right? So we settled on gold for a reason. But one of the key problems with gold is that it's got a weight problem. Gold is real heavy to move. And
Mhm.
so it becomes difficult to move $200 million from New York to Dubai if I need to make a payment for something.
Right.
So what we did was we centralized the gold and we put it in vaults for storage and we issued paper IOUs against it. Sometimes treasuries, but a lot of times just in the form of the US dollar or the pound. And so what happened was then governments seized the gold over time, like they do in wars, and they centralized it in vaults,
Right.
issued dollars against it. But then governments did what governments always do, which is they get out over their skis. They have more debt than they have the gold reserves to back it up. So then what happened in our case is that Nixon goes on TV in 1971. The US is 6 times more in debt than we have the gold reserves to back it up. Nixon temporarily suspends the dollar from gold, and here we are 50 years later. It's still temporarily suspended, right? All of that is enabled, at least in part, by gold's weight. If gold was easier to move, we would have never had to have centralized it. The governments would have a tougher time capturing it, then getting out over their skis, then depegging it. It's like this chain link of events, right?
Right.
Bitcoin does not have any weight. And so that's why I think it's competitive with gold because it's stateless. It moves in cyberspace and
Mhm.
can move instantly in some cases. Therefore, does not have that sort of Achilles heel. And so that's why I think it can be competitive as a store of value. That's why some people call it digital gold and a digital store of value. You can move it and confirm the block in 10 minutes on average, whereas gold to move from New York to Dubai might take 3 weeks and a series of security, and people are going to die, and it costs money and all of that.
Right.
Maybe they die,
Right.
maybe they don't. I'm just being dramatic.
No, I get it. I get it. That was a great explanation too. So, and actually never thought about the weight part of it, but definitely. So, how do you balance like innovation, stewardship, when family wealth represents decades of sacrifice, right?
Yeah. Yeah. Well, balance in terms of it would be foolish, and every family knows this, to take their decades of work. Maybe they had a business that then they had an exit event and sold out for X amount of money. Taking all that money and just going to the casino over the weekend and just blowing it. That's just obviously foolish. And it's a caricature of a foolish investment decision. Um, on the other hand, on the other side of that equation, putting it in the bank, I'm going to pick on that again, to be safe can be equally foolish. Maybe the
Right.
bank fails, or maybe
Right.
there's not enough FDIC insurance, or maybe just inflation happens to your money over time. Um, Bitcoin has been viewed and is still viewed by many as a sort of casino asset, or at best a trading asset.
Mm-hmm.
Trading is better than casino. That's how a lot of family offices or just families still view it as a trading asset. But the balance is just in terms of thinking, if this current fiat monetary system is dangerous in and of itself, in the sense that the government can at will print more money and devalue my currency, and everything is pegged and marked in this current currency, don't I want something that allows me to potentially step outside of this system altogether, even if in small percentage, maybe a one half of 1%. I don't care. Maybe it's $50 in Bitcoin, but seeing it as
Interesting.
outside of this current system,
Mm-hmm.
one could argue, you could say that that's a sort of form of insurance against the current system. That's how I try to think of it, at least in a hypothetical sense. What does it look like to step out of the current monetary system and have an alternative, a true alternative? That's like alternative investments are maybe, record royalties. Those are great. They can be great. But they still exist in the fiat world, is my point. And Bitcoin exists in its own world, self-defined. If fiat went away today, Bitcoin would not care. It would just keep confirming blocks every 10 minutes.
Right. It's so interesting. We go on for a while here. Volatility really, the question is volatility the risk, or really it's the misunderstanding is the biggest risk? I've learned so much today because it's not my line of country here. But it really is
Yeah.
a misunderstanding, right?
Misunderstanding of volatility itself.
The the misunderstanding is the bigger risk than just it's volatile, or that what you've
Mm.
said a lot of different things here that, oh yeah, that makes sense on a lot of
Mhm,
different
mhm.
levels, right? Rather than it's just you'll lose a lot of money, right?
Yeah, I mean, I think people should not afford, whether or not they can afford, they should not afford to misunderstand Bitcoin. And by not studying it, I think it's
Study.
by definition sort of a misunderstanding of it. Errors tend to abound in my observation of people with people who haven't studied it. People who ask lots of questions are, I think, always on the right track.
Yeah.
Just in general as people, that's curiosity and continued education is always good. But I think it's by default a difficult asset to understand, and it can be. We carry a boatload of.
Can't hear
I'm
you.
sorry, I went away there for a second.
Okay,
Okay, there. I tapped my microphone.
let's okay, start back and that we carry, hold on a second. We carry a
Yeah,
boatload of, we'll just fix that later.
fiat assumptions. Yes,
Yeah.
I'll start there.
Okay.
Um, we carry a boatload of fiat assumptions in with us, myself included,
Hmm.
into the discussion about Bitcoin. And Bitcoin tends to redefine everything. So, yeah, I think there is a danger in misunderstanding Bitcoin. The danger is in not studying it. And thus, I misunderstand what it is, what it's for. And thus, when I see it right in front of me, I don't see what it really truly is. I only see what I think it is or what the headlines said that it was. And so, yeah, when I talk to folks at every level, there's a lot of misunderstanding, I think, still yet about Bitcoin.
Oh yeah. Oh yeah. Well, if you had one final cherry on the top of everything that you've enlightened us on today, what would that be?
I would just say study Bitcoin. That's it. People who study Bitcoin, I know, simple and boring, right?
Yeah,
But
right.
what I've seen is that if you put 10 hours of study into Bitcoin, it changes how you think. If you put 100 hours of study in, it can change what you do. I've seen that quite a bit. Um, and I think if you put 1,000 hours of study into Bitcoin, then um, you're in a certain club called
Yeah.
Orange Pill Maxis. And then you
Right.
start saying crazy things.
Yeah. Well, you wrote a book about it. Tell everybody about the book and tell
Hmm.
everyone that's listening how to get in contact with you.
Yeah, thank you. My email address is eric@veritaswealth.net. So it's Veritas like Latin for truth, wealth.net, eric@veritaswealth.net. My book is called Bitcoin in the Family Office, an intelligent introduction for the ultra affluent. It's really to bridge the gap between where family offices sit in terms of their knowledge and the ability to sort of give permission to an investment committee or a family office principal to take this asset seriously. Once you study it more deeply, you realize it is a big boy asset. It's young is all, but
Hmm.
it's a serious asset and deserves serious consideration. But that gap, because in any circumstance, there are unknown unknowns. We don't know what we don't know. We don't
Right.
know what questions to ask.
Yeah.
And so I wrote this book after a year of talking to family offices, just casually mostly, not really any formal interviews, but I people will reveal quite a bit just in chatting. And so I would see the same mistakes in thinking come up, the same sort of patterns of behavior come up. And every single time I would leave an event, I would just go write two or three little notes to myself. And from that compilation of all of those notes came the book. And so what I wanted to do was really help put people on a set of tracks, as it were, to help guide their understanding of Bitcoin. Whether or not they allocate, the point is be able to take it seriously, even if you never buy it. That's not a big deal. The big deal is just in not understanding what it is that you're rejecting.
That's great. It's been a great conversation, Eric. I really appreciate having you on and look forward to having you come back again because I've been enlightened on a few things I never even realized. So I'm sure our audience will really enjoy it. Thank you so much for being here.
Thank you, Kris. It's been a pleasure, and I really appreciated your thoughtful questions.
Thank you.
Eric
This has been such a thoughtful and grounding conversation because what we talked about today was not just Bitcoin. It was trust, responsibility, clarity, and legacy. And what stands out to me in this, when it comes to our money, and especially when it comes to generational wealth, it's not about reacting. It's not about rushing. It's not about following the crowd. It is about understanding first, preparing wisely, and making decisions from clarity, not fear. Because these are not just financial decisions. They are life decisions, family decisions, legacy decisions. And those deserve a deeper level of thought, care, and intention. Eric, thank you for bringing such wisdom, calm, and integrity into a conversation that often feels overwhelming for so many people. May we all be guided by wisdom over noise, clarity over confusion, and courage over fear as we steward not just our money, but our lives and our legacy. I've created the Safe Money Blueprint. This is the same strategy that thousands of my clients have used to feel secure about their financial future. And you can get it free at healthymoneyhappylife.com/blueprint. There's so much to learn about healthy money. I hope today's discussion brings you one step closer to securing and protecting your future. So you can get started on the right foot, go to meetwithkrismiller.com and schedule your free financial fitness strategy session. Thank you for listening, and please subscribe to Money 911 so you don't miss our next episode, which includes health, wealth, and peace of mind.